Those retail banks that serve the mass market and won't be offering third-party product over a platform within the next 5 years will struggle. How to build a platform is, in my respect, a billion-pound question. Create this new customer experience that wouldn't be just a bundle of products that are just on the shelf, but something that is much more holistic, much more valuable to the customer. Many people in the industry look at Uber, look at Lyft, look at Airbnb, and there is always this chicken and egg question. Okay? So I think that the question about how to build a platform really comes down to for who. Challenger Bank will look at it as an opportunity. So they can acquire customers because they have slicker CX and they have some other USPs that will attract customers. But eventually they will need to offer those customers products and services that they cannot manufacture. As an incumbent bank, if I won't serve enough customer needs, customers will leave. So a platform strategy would primarily be a defensive strategy. I would execute it to stay in business and not to lose customers. Executing a platform strategy means that incumbent banks need to detach manufacturing from distribution. So essentially, it's like building new business units, separate business units that will have very, very different, in some cases, business interests and objectives. The platform unit will be interested in best serve customers and invest in AI and predictive analytics to optimize this next best conversation. Manufacturers will try to build stronger APIs to tap into any distribution channel that will allow them to sell their products and invest much more into RPA and automation. For those products that banks manufacture internally, we come to the technical challenge. Can they automate KYC and AML? Do they have personalization engines to better understand customer needs? And then there is a question as to how they onboard third parties, external vendors that can sell their products to their customer base. Which vendors can apply? Which vendors can build new propositions for my customers? What are the eligibility criteria? There are different models. If we think of open versus closed, open means that at some point customers will be redirected to the vendor's website or vendor's channel. And a closed model means that vendors that want to serve my customers will need to use my development kit. As a financial service provider, I will have much more control over the quality of my customer's experience, but with reduced flexibility and theoretically the number of vendors and number of options that my customers will have. And then there is always a commercial question. Do I monetize it? Do I make money out of it? Do I revenue share? I think that it's almost inevitable that most banks, most platform owners will make money just by the introduction fee. Speed is relative, it's a relative term. And yet, I think that it comes down to mileage. Incumbent banks in general will struggle to move fast because of all the right and wrong reasons. Okay? But building a platform is not something you can do overnight. You need to build your AI and understand how to hyper-personalize and build the vendor community, and that takes time. So it's about mileage and learning curve. Those that will move fast and those that will move first will have this advantage over others in terms of the mileage. I think that curve, in a way, is the ultimate disintermediator. Disintermediating the cloud providers, disintermediating banks, and owning all your interactions.